All right, guys, bang, bang. I've got Will here, just him and I back like usual. Will, what's going on, man? How are you?
Hey, I'm doing well, Pomp. I'm excited for it to just be back like old times. I feel like it has been the two of us in forever.
I know.
But yeah, it's been an interesting week. Excited to get into it, but doing well otherwise. How about yourself?
I think people have really enjoyed the conversations we've been having with other folks, but there's a couple people who just miss you and I going through the data. So maybe let's just start with kind of this RSI indicator. Normally, you are not known for putting technical analysis into the newsletter, but you included RSI as kind of the first metric this week. Explain kind of what that is and why you're looking at it.
Yeah, sure. So like for anybody who does TA, RSI is just, a relatively basic indicator. It's basically kind of tracking the strength of price. And so you have this range, right? And oscillator oscillates through that range. When it gets above, it's considered overbought. When it goes below, it's considered oversold. And so when you look at this RSI on the daily time frame and you kind of zoom out, you can see that we've been in this kind of downward trend since kind of the beginning of January. And we're right now kind of retesting that trend line. We've tested it and it's served as resistance 8 times. At the time that I wrote this, we were at like $250 higher than we were. So we were actually starting to break out above. But you need confirmation on the daily close to determine if you have broken out or not. So I don't know, just something to keep an eye on. It looks like we're kind of coiling up some momentum in price there. And that also kind of correlates with volatility, which we've been tracking. Any kind of major, indication of volatility is showing that we're ready for a big move. You can look at like Bollinger Bands, or you can also just look at like the historical volatility index and then just kind of plot that out. And you'll see once again that we're kind of at this trend resistance line, downward sloping trend line where, Bitcoin looks ready to break out. And, the volatility doesn't necessarily mean that the move's going to be up. It just means that we're going to have a big move, right? But looking at these, some of these other things, I think you can get, a better indication as to where that big move is perhaps going, which I think a lot of people know where I kind of stand in that. So.
And the next thing that you looked at was the perpetual funding rate. So explain what this is and kind of what it's telling you right now.
Yeah, sure. So the perp funding rate is unique to Bitcoin, where the perp is essentially, this futures contract that doesn't expire. You can think of it that way. And it's a contract that's pegged to Bitcoin price. And so it's pegged to it through the funding rate. And so for the derivatives, they have something called an index. And it's basically like a weighted average price based off of all the major exchanges. And so to keep the contract pegged to Bitcoin price, the funding rate adjusts in correlation to what the perp is trading at in relative to that index. So when the perp is trading at a premium to spot, the funding rate is positive versus when it's trading at a discount to spot, you have negative funding rates. So prolonged funding rates that are negative are bullish. Prolonged funding rates that are positive are bearish. And what we've had is prolonged funding rates since late May. A couple of days here and there positive, but overall negative. And so the last time that we've had prolonged funding rates like this was after the March 2020 crash, and kind of in that reaccumulation phase after that. It's been pretty much completely positive throughout the whole main phase of the bull market up until May. So it's been good to see these negative funding rates, but especially over the last 24, 48 hours as we started to rally a little bit. What that's basically showing is that the rally is more driven by spot than derivatives. So if the futures were at a premium, like I would be a little more short-term skeptical, because all these traders are coming in and leverage longing the move up, versus what seems like to be going on now is spot is actually leading the price up, while it looks like sentiment from traders is bearish, which is, by definition, like denial in the market, right? You want to see disbelief of the rally for us to be able to move up higher. It's almost like when we're at a top is when like the biggest bears turn bullish and everyone just thinks we're going straight up. So the consensus is that we're going higher. And so, traders are super bullish, and that kind of gives incentive for price to be pushed the other direction. We had the same thing. So like we had a long squeeze on the way down where everyone was long, and then it didn't take as much selling pressure to as it would have otherwise if you didn't have this high leverage to the other's position for more upside to push the price down. And it's the same kind of thing here. So like, when we dipped down below 30K, people were loading on shorts. And even since we rallied out of there, it still seems like traders aren't respecting the pump, so to say, which is what you want to see to kind of have this disbelief rally and slow grind up out of a bottom. So watching those funding rates pretty closely, like every hour, just to see kind of how traders are reacting to the market.
Got it. And then we've got this liquid supply ratio that you highlighted as well.
Yeah, liquid supply has been one of my favorite charts over the last month. It's one of the charts that like Willie helped me create. It's basically comparing illiquid supply to liquid and highly liquid supply, and so you're essentially capturing this movement of coins from weak hands to strong hands. And so I literally labeled the chart Bitcoin's moving to strong hands. But yeah, it's the liquid supply ratio. And so what you've seen is throughout the kind of middle part of the bull run, I should say, when like late September to early to mid-April, you saw this really strong increase in this. And so that was showing a bunch of coins were getting locked up. We had that supply shock, right? And so you can also look at exchange flows to see that as well. But when we got into mid-May, late May, you all of a sudden started to see this oscillator trend down. If I had this back then I probably would have been less bullish than I was at the time, because you just started seeing a bunch of coins that were being puked out by what was previously recognized as strong hands. And so since late May, you've seen this kind of slow grind up in this, but then over the last couple of weeks, a big pop, big move up. And so that to me is indicating, we've had slow reaccumulation, but over the last couple of weeks, that's ramped up and we're starting to see more aggressive accumulation. And of course, that's been trending up while price has been slowly grinding down. So, we've been talking about on the show, this divergence between this and price. I personally haven't seen any divergence larger than this. I asked Willie if he has, and he says that he can't think of anything. The only other divergence I've seen in somewhat recently that represents this is in late September after we had that big drop. I remember like when we first, started going into the bull run, we kind of had that move up and then that sideways BART. If you look on the chart, you'll see that after that dump, it was a similar kind of idea, but just on a smaller magnitude, where like a bunch of coins became liquid, and then you saw this up, like slow grind up in this indicator, which was showing like those coins were getting reaccumulated, but price was continuing to trend down. So like you had the similar divergence there, but just not on, such a large magnitude. So the way I kind of see this is like the larger the divergence, the bigger effect it's going to have on price. And so I suspect that once we kind of start to get volume back, because I think that's part of the reason why you haven't seen this information priced into the market yet, is because we've been having very, very low volume. But I suspect once you start to get full-blown volume back, and I think that's likely to come soon because we were talking about volatility breaking out. I think once that volume comes back in, then you'll see this supply shock really start to get priced in. Because as of right now, when you look at the ratio and then you look at where we were earlier this year, we're at levels that we were at about 50 to 60K BTC.
Hey guys, what's going on? Before we continue with this awesome episode, I want to quickly talk about our sponsor, Kraken. For the last 10 years, Kraken has built one of the best platforms to buy and sell cryptocurrencies online. They've got a brand new mobile app, the Kraken app. Today, you can go on and buy Bitcoin or up to 60 of the most popular cryptocurrencies in the world. And you can do that on the go 24/7. All you have to do is simply download the app, connect your bank account, and you can get started investing with as little as $10. It only takes a minute to get started. With the new Kraken app, you'll have your portfolio in your pocket. You can track your portfolio, see who the winners and losers are every day, track your favorite project, or just simply look at the trading volume for your favorite assets. It has all the features you need without any of the complexity. It's simply the best place to buy and sell cryptocurrencies. So go to kraken.com/bangbang to learn more, or go to your favorite app store and simply search the word Kraken and you can download the mobile app there. Kraken's been a longtime supporter of this show, so to say thanks, it would mean the world to me if you would go and download their new mobile app. All right, let's get back into this episode. I hope you're enjoying this one.
Got it. And when you think about this OTC outflow RSI, I think this is an indicator that you created. Is that kind of confirming exactly what you're seeing with the supply ratios and kind of this movement to strong hands?
Yeah, very similar. So, people talk about exchange flows. You can also look at OTC flows. And so kind of like from a first principle standpoint, I was thinking, what's the money that moves the market? It's whales, right? It's institutions, high net worth individuals. So how can you track that? And so I think that one of the best ways to look at this is just looking at the raw flows in and out of OTC desks, which is where these entities navigate through to make their purchases or sells. And so I kind of plotted this out with an RSI, and then you can kind of gauge these really strong moves up in the outflows. So if there's a really strong trend in outflows, the indicator will break out of the RSI range, and then you'll get what I label as a buy indicator. And then if there's a lack of OTC outflows, right? If there's very low demand, then the strength of the indicator of the oscillator will trend below the range. And then that's considered a sell because there's very low demand, right? And so this has had pretty accurate signals over the last year. But we actually just flashed the second in a row, buy signal. But the reason why I think this one has so much weight is because it's the largest that we've seen since last July. So like if you look at this in the newsletter, or you can plot this out yourself for anybody on Glassnode, you can see that this RSI, this outflow RSI is really ripped up and even stronger than it was last July, but it's on par with the levels that it's at, but really aggressive move up in that. And so to me, looking at that along with seeing whale wallets tick up, you've seen them accumulate pretty heavily over the last few weeks. Those two things are kind of coinciding with each other and saying the same thing. And then below that, I just put out a chart of comparing the outflows to the inflows. And then you'll see that right now that the outflows are outweighing the inflows to OTC desks.
Yeah. And what's fascinating to me about the outflow to inflow is it's very clear that this is not just kind of a one day thing. This has been a trend here for a little bit since maybe like mid July or so. Now, in the past, and I know this is just kind of you speculating versus actually being able to prove any of this. It appears that the inflow outflow chart kind of it rises at peaks, it kind of comes back down, it rises at peaks. What drives kind of its inability to just go parabolic, right, and kind of take off like that? Is that just natural cyclical, parts of the market? Is that there's just only so much Bitcoin that people can buy? Any ideas there?
Yeah, I think you see, like bigger spikes in the OTC in and outflows, both, so basically like the OTC volume, if you will, when you kind of get to these bigger inflection points, like, when we originally dumped down in late May, you saw, a big spike in those in and outflows. But, as long as they're matching each other, then it neutralizes it out. So I think like when you see a strong move up and you see, those outflows or inflows for that matter, for, if you're trying to make a bear case, if you see those strongly, outpacing the other, then I think that's a stronger signal. And then also if you're getting multiple in a row. So like, right now if you look at the chart, we've had 5 straight, kind of coinciding spikes between in and outflows where outflows have outpaced inflows. And so to me, that gives it a more bullish signal. And you're also seeing, if you look at the two, this like higher high in the in and outflows, both respectively. So it's showing that there's more activity going on, right? And then if you look back in late May, you had 4 straight bearish spikes where inflows were outpacing the outflow. So that would obviously resemble more of a bearish signature.
Got it. And then when you overlaid all of these various charts on top of each other, looking at the various wallet cohorts, it appears that, again, just kind of confirmation that whales are absolutely buying up Bitcoin, kind of adding, 110,000 Bitcoin to their holdings since May 19th?
Yeah, exactly. So this is just comparing the holdings of different size entities, like you said. I couldn't fit every one in here that would have wanted to, so I kind of just grab some of the main ones because I can only compare 4 charts at a time in Glassnode. But I compared what's essentially retail, and then you're looking at the octopus and shrimp, dolphins and sharks, and then the whales. So, these are retail, which is below 1 BTC, 100K to 1K BTC, 10 to 100 BTC, and then 1,000 to 10K BTC. And so what you see is almost every major cohort is in accumulation. The retail has been stacking harder than ever. I don't know if going back in the chart that I've ever seen them add to their positions this heavily. They've added over 37,000 BTC since that May 19th capitulation event. Whales are accumulating, like I said, especially over the last few weeks. They've now added over 110,000, like you said, since the May 19th capitulation, 100 to 1,000 BTC. This is an interesting cohort because this has been trending up aggressively throughout the year. I suspect this kind of resembles like hedge funds or high net worth individuals, just given the sizing and kind of coinciding spikes that you saw between this cohort's holdings and the cash and carry, the spreads there. But you saw a huge increase kind of at the beginning of the year in this cohort. And then this actually kind of just like bled sideways, which has been interesting. Just given like how aggressively they had been adding to their holdings, and now that just seems to have completely stopped. But then again, the whales are accumulating. So, it can get a little noisy, like trying to compare each major cohort. Like if I was able to break it down, I would probably just do like, retail, everything below 1, and then kind of look at the mid-size holders, right? And then anything over 1,000 is really a whale, in my opinion. And so Willie's actually done some kind of his own variant of this, where he's looked at the exchange holdings that are shown as entities between over 10,000. Because the reason I didn't include 10 to 100,000 is some of that is exchanges. So like if that's going up, that's not necessarily fully bullish, because it could just be an exchange that's recognized as an entity with that amount of BTC between 10 and 100,000 as their balance going up, right? So Willie actually filtered some of those things out, and he put together a little thread on Twitter. So I would highly suggest people go check that out. But you just keep that in mind. So like, for example, like the over 100,000 BTC cohort, a lot of people will be like, oh, the massive whales are dumping. The over 100,000, entities are dumping. Like, guys, these are exchanges. That's a bullish thing. The exchanges are their supply is going down. So like you have to look at what are these cohorts, and like kind of factor out some of these things. Like in the over 100K entities, once you factor out exchanges and then you factor out grayscale, you're left with 150,000 BTC. And so by definition, there can only be one other entity other than exchanges and grayscale. So just this concept of like, and I suspect that's likely some kind of like custodial service that last entity. But anyway, I just think like you need to look at what are the other entities that fall under those kind of cohorts to be able to get the best picture, and Willie kind of subtracted those out and got a more accurate signal. But yeah, just for anybody that perhaps like I've got a few comments that were saying look at the 10 to 100K BTC cohort and also the over 100K. So I just wanted to just clear that up.
Yep, that makes sense. And then it seems like a lot of the selling's coming from the younger market participants, which has been a theme that we've been talking about now for a couple of weeks. But what are you seeing there?
Yeah, sure. So this is something that's been trending down since January, and for a while in the newsletter, I have been throwing in dormancy, which is like a variant of Coindays destroyed. And so the way you can think of that is, coin's in a wallet for one day, coin moves out of the wallet, one coin day is destroyed, right? And so this is a good signal in a bull market to kind of gauge the selling of older market participants. When you have higher coin days destroyed, then that's showing that older coins are being sold. We can also just show that there's really high volume. So for example, like you could have one coin that has 10 coin days that's sold, and that shows up as 10 coin days destroyed. Or you could have 10 coins that have been sitting in a wallet for one day, and you still get the same amount of coin days destroyed. So I think here you need to look at something that is going to be adjusted for that volume. My bad. Something that is adjusted for that volume, which is the ASOL, not the Coinbase destroyed, because this is just literally the raw average of the age of the coins being sold. And so I think this is a better indicator as to like the behavior of selling from different cohorts by age when you have really low volume like this. Hope that made sense. No, that was super wordy. So anyway, this has been trending down and something that, we've been watching for a while, but it's just showing the selling is coming from majority new market participants. And, we're seeing that aggressive accumulation from strong hands, while, coinciding most of the selling coming from, new market participants, aka weak hands.
Got it. And then what about miners? It seems like the miners are kind of continuing to not sell and accumulate. Is that true?
Yeah, absolutely. So looking at this two different ways, you actually could look at it three different ways, but in the newsletter, I put in the transfer volume from miners to exchanges. So this is just looking at the raw inflows and outflows to exchanges. And so you see this has been in a downtrend since kind of mid February, but we had a big spike around when we had the whole China migration, when miners were moving out of China and had to liquidate some of their Bitcoin to move. But that's gone back into a downtrend after that. And then another way to look at this is just the miner net position change. So there's the miner net balance, and then there's also the net position change. So the miner balance is good if you're trying to watch like intraday things. But if you're really trying to identify a trend, I think that the net position change is a lot more valuable, because if you're seeing a clear trend on something that is looking at, a 30-day difference of something, it's in my opinion, a much clearer signal of a kind of broader trend, rather than just like looking, on every day at, miner balance went up today, miner balance went down a little bit tomorrow. Like that can get super noisy and just kind of like it's just too much to, I'd rather just look at what's the broader trend, the solidified trend that, over a 30-day basis. So I think like that miner net position change is the most valuable in terms of like looking at that trend. But yeah, for sure, miners have been accumulating, especially over the last 2 weeks.
All right. And then UTXO, bring us home with this last one. What are you seeing in the UTXO? You love UTXO.
Yeah, I love this chart because it's basically like a volume profile of Bitcoin. And so, it's showing how many Bitcoins, how much of the supply has moved at different price levels. And so what you see is we just have like this massive zone of volume between 30K, 40K, especially between like 30K and 35K. And so when we went down below 30, we were kind of like looking over into the abyss where we really didn't have any support until like 26K or 22K. But it looked like we got pushed right back up into there. And so now we're kind of sitting back in the middle of this range. But one interesting thing, the 31.7, that level has the highest level of money, of Bitcoin's money supply that's moved at that since 10,300. So you have this huge kind of base of capital here building up, and if we were to have some kind of bull run continuation, I would be eyeing this level for some kind of like macro support level in the future. But this is the largest zone of support that we've seen since like 6K to 10K. So.
All right. Just as a kind of summary, how are you feeling right now? Like in terms of what we're seeing, bullish, bearish, still sideways, kind of cautiously optimistic. How would you categorize it?
Sure. So I think in the short term, right, we can be subject to perhaps, a bunch of leverage traders hop in all of a sudden, decide to go leverage long, and that's going to, of course, incentivize price to kind of get pushed down in the short term. So, it could get a little noisy in the next couple of days, perhaps, but, I suspect over the next couple of weeks, we're going to start to see a move up. The accumulation trends that we've been following for over a month now, I think are finally starting to get priced in a bit. It didn't seem like it was going to happen for a while, but yeah, I think over the next few weeks, you'll start to see that kind of get reflected in the price, especially once volume returns. And I say that just because watching volatility, some of the charts that we had mentioned earlier, we're sitting right on the breakout of this big move, and looking at where that, if I had to guess where that was going to go based off of onchain, seeing that accumulation to me is pointing that move is going to be upward. So that volatility break is going to come out in the next couple of weeks, and that's why I say that. So I'll be watching closely, man.
What do you think is the most likely scenario through the end of the year?
Yeah, it's an interesting question. I think it all depends on like what you see from the institutionals, and if you start to get a bunch of announcements and I don't know, like some ETF news, then it could get pretty crazy. I personally think that we kind of top out in early mid 2022. I've seen it as far as like the length of the cycles, the idea of like this lengthening cycle thesis. I kind of agree with that. So I wouldn't be surprised if like we didn't if we extended out to spring to summer 2022 for some kind of like big final move up perhaps. But for now, I'm just watching to see in the short term if we can break the 200-day, because I think that's kind of like a key level that traders in general or investors in general watch. To determine if an asset is kind of in a bull bear market, right? So watching that level, and then if we can break all-time highs, I think we'll see a pretty aggressive move upwards. But I think in terms of like the remainder of the year, a lot of that depends on the macro too, obviously, but just from like a pure internal Bitcoin standpoint, I think what you kind of see from the institutional adoption side. What about you? What do you think?
I think that there's a lot of bear sentiment and Bitcoin's lulling people to sleep, but I'm not sleeping. I remain convicted on the long term. So good luck to everyone out there.
Yeah, I got into Bitcoin in summer last year, and so I remember when we were sitting at like the mid 9K, like we were sitting at like 92 to 9,800, and we were just like chopping and chopping and chopping. And I was like, this thing never moves. Like, what is everybody talking about? Bitcoin's exciting and stuff. Like, this thing is just sideways forever. And then all of a sudden, I remember, boom, it broke through 10K, and that was it. And a very similar thing with 20K. We were just sideways, and the high 19,000s, and then I remember one day I woke up one morning and we'd broken out to like 22K or something. And it's like Bitcoin moves in like a very small portion of time. And so like being out of that's why I always like, I'm always, I think, going to have, a large portion of my holdings just in cold storage, because with Bitcoin, like the real risk is one day waking up and, all of a sudden price is driven up on some news or whatever it may be. But like, most of the moves, I've seen some statistic on it, but I don't know it off the top of my head. Most of the moves come in a very small portion of the time that Bitcoin trades. So
that has always been true, and I think it's going to be no different here. So pretty nuts. All right, where can we send people to follow you on Twitter or follow the newsletter?
Yeah, sure. I'm on Twitter at W Clemente III, and then my newsletter is BTC by WC3.
All right, my friend. We will do this again next week, but you're doing a great job. Keep it up. I think a lot of people are counting on you to keep them informed. So let's talk again at the end of next week.
Sure. Thanks a lot, Pomp. Take it easy.